Thank you for watching the CEO Barbecue. My name is Antonio, and today I'll be looking for gold in southwestern Quebec. Joining me on the barbecue today is Kieran Patankar, the CEO of Maple Gold Mines. Before we get into the actual interview, though, I'd like to warn you that we have received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Maple Gold is listed as MGM on the TSX Ventures Exchange, where over the last 3 months, an average of about 500,000 shares have traded daily. Their 52-week high is 9 cents and their 52-week low is 4.5 cents. With a market cap of 36.5 million Canadian dollars and about 455 million shares outstanding. Today, this is an 8-cent stock, so close to that 52-week high now. Interestingly enough, last time Kieran and I spoke, it was close to the 52-week low. And I'm not doing a full company overview here today because, again, as I just referred to, Kieran and I sat down for an in-depth introductory interview that was about 3 months ago, which will be in the Maple Gold playlist on our channel. But there is a new financial report that's been published since, so I'll briefly go through that here. This one shows me the numbers as of December 31st, and the assets side of the balance sheet had $8.8 million in current assets on it, most of which, $7.8 million to be specific, was in the form of cash and cash equivalents, whereas the liabilities side had a total of $3.8 million on it, 3.6 in current liabilities and 200 grand in the non-current liabilities side. However, the majority of the current liabilities, specifically 3 million of the 3.6 million, was accounted for by the premium on the flow-through shares. So technically, as of still, and given that there's a currently ongoing drill program, technically not debt. This financial statement also provides better insight into how the company spends money because it showcased the full year numbers for the fiscal 2024. And that had a total of $5.5 million in operating expenses recorded on it, split almost halfway in exploration and non-exploration expenses, specifically 56%. And of that, $5.5 million went toward exploration. That's expected to be different this year because the company is now currently actively drilling after being restructured last year. Now, the G&A shows up as $2.4 million for the full year here, but that includes depreciation as well as some share-based payments, which of course are non-cash expenses. So the actual out-of-pocket G&A was an average of about $150,000 a month, which is notably about 50%, or 46% to be specific, lower than the out-of-pocket cost, the out-of-pocket G&A for the fiscal 2023. Within the $3.1 million for the exploration expense, again, about 35% of that money, or $1.2 million, was spent on salaries and benefits for the exploration team, and about 25% was accounted for by transaction costs, with various other costs like camp, equipment rental, and so on, making up the rest. Again, likely to be different this year, though. As to the G&A, the majority of the money went toward directors, management, and professional fees, which combined accounted for about half, or 56% of the total spend, whereas marketing, travel, and business development accounted for about 19% of that spend, with office, general, and as well as regulatory fees and stuff like that accounting for the rest of the spend. As always, though, please go to setterplus.ca yourself and make sure you're getting the numbers and the full picture and the numbers and the right interpretation, because try as I may, I'm not infallible, so I might be making mistakes in my reading of them. That all said, again, there's a full company introduction slash interview overview in the Maple Gold playlist, but in a nutshell, Maple Gold is currently focused on the 100% owned Douay and Joutel gold projects, specifically Douay at the time specifically. They're both located along the Casa Berardi deformation zone in Quebec's Abitibi, where they are looking for both bulk tonnage, intrusive hosted gold, as well as high grade orogenic gold systems. Again, there's a currently ongoing 10,000 meter drill program here with some results having come through from it already. So hopefully we'll get to all of that in the conversation today. But first of all, Kieran, thank you so much for being here.
Thanks for having me, Antonio. It's great to see you again.
Pleasure is all mine, of course. And I am looking forward to the conversation because 3 months ago, when we spoke, a few days after our conversation, actually, you announced that you'd started a 10,000 meter drill program that you thought would take you 3 to 4 months is to complete, is what you said back then. How far up that program are you now? How's it going?
It's going fantastic. And it's great to be back talking to your audience with some meaningful drill results, the first in over 2 years at Douay, as you mentioned in your intro, after a lot of restructuring. The program that we announced in January is progressing very well. We're at over 7,000 meters of the 10,000 meters that were originally planned at Douay drilled. That's so 70% complete. It is on time. It is on budget, actually under budget slightly, and results speak for themselves. Right, we put out the first results from the first 5 holes of the program just about a week ago. There were some excellent results. Gold encountered in every hole, but in particular, the Nika zone step out hole that we announced, hole 338, was a clear standout. I'm sure we'll get to talk more about that, but we're very excited about it. And so we've got currently 2 rigs at site that are working at the Nika zone following up on that drill success. And we expect the completion of that 10,000 meter program, as I said, on time and on budget.
We are definitely going to talk a lot about the Nika zone and a bunch of other stuff that's going on around there. I believe the idea was to use 70% of your drill budget to infill and convert ounces. So I'm just going to assume that that's still the strategy. But where have you drilled so far? Is everything that you've drilled so far only been infill, or have you done some step outs to besides obviously Nika?
Yeah, well, it's a very interesting question because I think when the market thinks about infill versus step out, right, they're not thinking about a project that has the kind of scale that Douay has. Just to recall, Douay, the currently defined mineral resources, has a 6 kilometer by 2 kilometer footprint, and the majority of the resource sits in the inferred category. So you're looking at, at some points within the resource, you're looking at, well, we see the continuity there. Obviously, us and Agnico working with SLR put out an updated resource in 2022. The continuity is defined in that resource study, but you see gaps within the current footprint that are 200 meters, for example. So some of the holes that we announced, while they may look like, if you're looking at a plan view map, they may look like infill holes. As demonstrated by what we put out at Nika, the collar location may be within the current pit boundary on a plan view. But when we designed the step out, it was a 300-meter down plunge step out from the nearest drill hole, which was in this case hole 282X, drilled in 2021, 1.6 grams over 132 meters with open space, in the direction of favorable host rocks, and we hit, right. And we'll talk about the result itself, but it was a better hole, arguably, than hole 282, and in the right direction, and an over 200 gram meter intercept that's open in multiple directions. So the question about 70% infill and 20, 30% sort of more discovery type drilling, I wouldn't call the 70% infill per se. I would just say that it's kind of within the resource area at Douay. We are looking at other zones. We certainly had some higher grade intercepts at other portions of the Douay system that we also designed step out holes at. And so I think the rough percentage of the split between drilling in the resource area and drilling outside the resource area, 70-30, is correct. But I certainly wouldn't categorize all of the 70% that's within the resource area as pure infill. I think we're still trying to look at open spaces where there is potential to add materially to the resource endowment and also upgrade the caliber and the quality and the grade of the existing resource.
So essentially, in the MRE zone and outside of the MRE zone might be better here than infill and step out. I also want to talk about Douay Quest or Douay West. Toward the latter part of the conversation, you say you're going on budget right now. How's that going? How much money do you have right now?
Yeah, so as our financials showed, we entered the year with 8 million. We've been, this is the meaty part of our drilling season. We're just coming up at the end of the freeze. I was just out at site last week with my team, looking at the new holes, and it's still cold. We put a social media post out with a picture of what it looks like standing at the top of the head frame, and it's chilly. It's not like the West Coast here where it's certainly full on spring. But as we said, cold is good for us, right? Cold means frozen ground. It means two rigs turning in the Nika area. One of those holes, 338, was drilled right off the road. And so it's easily accessible year round. But we want to take advantage of frozen ground while we have it. Um, we had budgeted originally roughly $400 all in, $400 per meter. That includes the direct drilling costs, but also the camp, the people, et cetera. We're coming in under that currently. So, again, it's about the efficiency. You mentioned at the intro that, we're looking at, and we have been looking at optimizing, streamlining, and making the whole company, whether it's corporate, whether it's operationally, just making it more efficient across the board, putting more. And as you know, every incremental dollar that we save on a per meter basis is just more meters that we can drill, right? So the way we look at this is it was a 10,000 meter minimum program. It's helpful that within the first, and this is the flexibility that we have when we added the second rig on March 20th, we can continue with the drilling that was planned, but we have a success here, right? So, with the success, with the step out, you're going to do some different, follow-ups, right? Yeah, as opposed to just blindly keeping the blinders on and going off and drilling every target that you had originally laid out. This target, the fact that it's open in multiple directions, we've gone in, we've drilled a wedge hole, which is 30 meters, 40 meters up plunge. The core has actually been logged and cut and is being sent to the assay labs as we speak. We also re-entered a hole that was 40 meters to the west of this zone. That's going to be 54X. That has also been logged and cut and sent to the assay labs. We've got a hole planned in the middle of the 338 hole and the 282X hole, roughly 150 meter spacing. We're trying to define really a geometry and a plunge before, as we said, and this is consistent with everything that I described in terms of our philosophy of this phase one program at Douay. It was trying to look at the upper 500 meters of the deposit where there was open space, filling in some of those gaps and really vectoring before we start to go into a phase two. And it is helpful that a lot of the area that's in the down plunge direction here, all of it remains open. So again, I think the program itself is going fantastic. The team is doing an amazing job. You're seeing a motivated, highly motivated staff. The support teams at Major Drilling, Expo Logic. It's a pleasure to work with this team. It's a completely new group than what would have run drill programs for Maple Gold in the past. But I'm very pleased and very proud of the good work that's been done by everybody across the board throughout the organization, and our contractors have been nothing short of spectacular. So
You're saying $400 a meter, and you might want to dial 911 because I'm going to do math off my head. So if I faint on screen, you might want to call that for me. But $4 million is essentially what you're going to budget for this program. You did 150 grand a month in terms of G&A last year, so that's going to put you at about $1.5 million for the rest of this year. There's 9-10 months, call it, from here on out. And you started the year with, as you mentioned, or as I mentioned at the beginning, about $8 million. Does that mean you're not going to have to raise money before you have all the assays from this drill program out?
that's correct. That's
Okay.
the reason why we went out and we raised the money and restructured and did all the things, and not just the headline was, restructured deal with Agnico, $4 million raised with Agnico at a premium, 5.6 million raised in November, brokered, mostly institutionally subscribed, the right sort of foundation for success. But getting out and drilling and doing the things that we're trying to do, we are not out here to try to just dilute shareholders. And, we obviously every junior company that's, pre-cash flow, needs to be reliant on the equity markets. Obviously, we've seen, a more interest certainly in gold over the last, couple of weeks. It's been quite robust, and our share price has certainly responded. But we're not just riding the wave of gold momentum. I think we're still substantially undervalued. And, when we start to see a bit of lift, as you said, we were trading last time we talked at a 52-week low. How quickly fortunes change, right? This is the junior business, is that, at times it's based on, exogenous factors that the company has no control over. And at times it's really the things that the company and the management team and the team on the ground have actually done to create value, right? And I think in our case, we've done both. We have tailwind in what's happening in the gold sector, but we have put everything in place to succeed as a company, not only with, structure, with a proper balance sheet that's been cleaned up with the right team in place, but now the drilling success that's started to show results. People are starting to pay attention. And so if I go on the rising gold tape, on the rising, share price momentum, and I just tapped the market. That was the exact opposite thing that I wanted to do when we raised enough money last year to set us up for success. Is that we've just released 5 holes out of 30 that were planned, and so you can guarantee we have more coming. In terms of when we say, in our presentation, and I talk, I haven't really even had a chance. I was at site all week, as I mentioned last week. So it's not like we were really out aggressively marketing our success. So there was a lot of volatility in the market last week. Part of me looks at the volumes that we traded and says it's spectacular, but we were also a bit of, came out on Thursday, what our friend down south called Liberation Day. I think it was Liberation Day for Maple Gold, right? I think we actually got out of off the schneid, so to speak, with a lot of the weaker hands sort of cleaned out, and over 16 million shares traded that week. And the way that I see it is, as your original question was, is are we financed for the year? Absolutely. That was the reason why we did everything we did. And there's a heck of a lot more news flow coming out in terms of, when we say we have fully funded catalysts, we mean it, right? That's why we not only raised the money, but made the company and the operations more efficient.
How is the situation in North America? Do you feel liberated yet, or is that not setting in quite?
Yeah, I mean, it's always a loaded question. Like I said, I'm an American and a Canadian, and I certainly don't like to see a lot of the saber rattling, and I think volatility as a whole is not good for, for people, for the world. But those things aside, it certainly has had a positive impact for people that are looking at hard assets, things that are stores of value, traditional stores of value like gold. But I do think that when you see the kinds of volumes, I mean, I had mentioned that, and your shareholders can look at a share price chart. So that when Maple last released drill results, it was August of 2023. And on that day that those deep drill holes came out, this share price was down 50% on 4.3 million shares. If you look at the day that we announced our results this time, which are our first, results at Douay in over 2 years, we were up 36% on an otherwise, abysmal day in the market on, 11 million shares traded, right? So we've blown through, I think this was maybe the second best trading day in Maple's history after the announcement of the joint venture with Nika back in 2020, 2021. So do I feel liberated? Yes, but I still have a, highly undervalued company that I'm running that's still literally, we have to keep ourselves in check here. At 8 or 8.5 cents, I mean, we are still a $35 million market cap company. So while we have traded off of our lows, I think there's a lot of catalysts and a lot of excitement about our organic growth pipeline from not only this drill program, but what it tells us for what we can do with the broader Douay. And, again, we haven't even talked about Jutel or Morris or regional exploration or anything like that. But I'm really proud, again, as I've said, with the team, the technical work that's been done. Results certainly speak for themselves. And as I said, some decisions that we've made, there's not a lot of instant gratification in this business. It's been a hard slog, as most turnarounds are. I've done 2 of these before, and mixed results, but certainly we got to good outcomes with successful exits. This one, it's been a bit of a labor of love because I know that the geology, the partner, the location, the gold, tape, things that are there that are really favorable for Maple. I think they're still, by the broader market, they're largely ignored, right? Because we're at that market cap threshold where, gold can be up $200 in 2 days, and we're up, maybe half a penny. So I think there's a lot of opportunity here, but I do feel liberated in the sense that maybe liberated isn't the right word. I feel I feel vindicated in the belief that we've always had, that our partner certainly has had, in the long-term potential of the assets. And we know this one drill hole doesn't change fundamentally a story, right? It just reminds people of the kind of upside that we have with established ounces with infrastructure. It's up to us to follow up on that success with further success.
I was only half kidding when I asked that question, but I appreciate the serious answer there. How and when do you think you're gonna have the rest of the assays? Is that 30 holes, five are out, 25 left? Is that five more news releases? Is it 25 more news releases? How do you want to assay it out?
Again, we release holes when there's material results to release. We release them, as soon as practicable after we have the final assays. The way that I would look at, I mean, we have a map in our current deck online. I urge people, investors in your audience, to go online and look at our materials. They've all been updated recently. You can see the drill plan. You can see what we've done. You can see the sequence of things that we've done. You mentioned Douay Quest. There are some interesting targets that we had even before we had the full results back from Nika. We had a plan in place, right? We had a sequence of holes that we had designed, and we, in a way, we were starting from the eastern portion of the porphyry zone, working through central, working through, Nika, doing a Douay Quest, but we're working systematically through areas that we know we can drill when the ground's frozen, right? Because we're taking advantage of the winter. And then circling back to targets, like, for example, at the, 531 zone where we had a 28 meter, 8.8 gram intercept back in 2021, the step out holes there, that area is on an esker and it's higher and drier. So we can drill that, year round. So in terms of sequencing of assays and assay results, I mean, results are going to be released as they're received, vetted, and interpreted. But I would expect, as I said, the first batch has just come out. We have a very we have a queue of assays that are sitting with the labs that are pending. We have core that's being sent to the labs on a daily basis. So again, I would expect now that we've got our first results out, and as I said, 2 rigs now turning on Nika with follow-up testing. So steady news flow, I would expect over the next couple of weeks going into the summer. And then we'll take a step back, digest, and we'll start gearing up immediately for the fully funded 3,000 meters that we have planned at Jutel. And again, the optionality for us is there are certainly areas within the Douay deposit. For example, 338, we've shown a lot of pictures of where the rig was actually set up. And again, when we were out there at site yesterday, you can see it's just off the road. The down plunge direction gives us some opportunities there, even if it gets a little bit wetter in the summer. So we'll revisit the program as a whole after we get through all the 10,000 meters that we have planned. And the intention is to go for as long as we can with the 2 rigs that we currently have on site, and then at least keep a rig there so that we can move on to Jutel. And if we need to keep a second rig to do additional follow-up at Douay, then we'll do that. So.
How's the ground conditions right now? You said frozen. Frozen is good for you, but what about the underground conditions? Have you dealt with any major core loss or anything else to write home about?
No. In fact, the core looks beautiful. It's coming out, and again, that's a credit to, the team we're using Major Drilling. I think they're doing a fantastic job. It's very professional. We found everything that's coming out of the core. It's nice that I had my full technical, group there last week, and we could look at some of this. That's probably the most rewarding thing, is to be looking at fresh drill core. The geologist in me gets very excited when we can actually look at something new. And we've looked at a lot of the historical core as well. That was part of our relogging and remapping, and new technical interpretations of everything that are going on was based on reviewing all the 250,000 meters of drill core that we have in our endowment, right? So adding 10,000 meters to that endowment, as we discussed, it's not only about finding targets that were geologically supported, but ones that had the potential to return on investment, right? And certainly we demonstrated that with the Nika 338 hole. I hope we're going to have more of those. Certainly the planning of it was designed with that in mind. But yeah, ground conditions have been great, both at surface and in terms of what we're seeing from the core, everything's looking good.
Well, I do want to talk about the core, well, the assays that you had come in about 2 weeks ago now, with the headline reading 2 grams of gold, that 2.05 grams of gold over 108 meters, of which, of course, that's a great intercept. But it was at about 500 meters vertical depth. So given that most of your other resources is shallower than that, why do you see this as an important enough intercept that you now want to follow up on it, or that you are following up on it with additional drilling?
It's a great question, and I know a lot of our a lot of our audience and a lot of the people that have followed Maple Gold over the years are looking at this big system, near surface, pit
Mhm.
constrained, and thinking open pit, right? One of the interesting things that you have to look at if you take a step back and you look at the Abitibi as a whole, the deposits in the Abitibi, they typically display more continuity in the vertical sense than in the lateral sense, right? Because these are deep-seated gold systems. Ours, for example, it straddles this Casa Berardi fault. Along the Casa Berardi fault, we have a major intrusive complex, this cyanidic alkaline intrusive complex that intruded and brought a lot of hydrothermal fluids up with it, created a lot of alteration, bleached a lot of rocks, and so you have a very complex, structural, tectonic, lithotectonic sort of regime. Um, why is this zone so important? Well, we always said that we believed that there was potential to expand the Douay system at depth, right? This is sitting at surface. It straddles a major structure. So there must be pipes and corridors and things along which, the direction of fluid flow, for example. Sure, there's been some faulting and, some other geologic forces at work here, but there always was a belief that, if this thing has only been drilled off till about, 350 or 400 meters, um, what is the potential for this thing to expand at depth? And if you start looking at other deposits in the region, you look at our partners, there are a couple deposits, for example, Canadian Malartic comes to mind. You start looking at, when they transition from the open pit at Malartic to now mining underground at East Goldie and Odyssey, you start looking at what are the kinds of grades and thicknesses that they were encountering that supported, a bulk tonnage underground mine. And they're not flashy. I mean, certainly in our results, to come up with 100 meters, 107 meters of 2 gram material that included 56 meters of 3 gram material, 56 meters of 3 grams at these depths is pretty darn good from an underground mining standpoint. And so if you can demonstrate continuity, right? And if you compare it to the hole that was its nearest analog, which was the 282X hole, that also had 132 meters of 1.6, but it included higher grade component there that you could start sort of drawing the lines between these two holes and start to sketch in true thickness, what's the vertical distance, what's the lateral distance, and start coming up with a rough volume and tonnage. I mean, we can't do that for compliance in 43-101. But the point is that if you start looking at this part of the world, you already know that there's infrastructure here. We're off of a major highway. We've got Quebec hydropower, grid power. You've got Douay West, which has 500,000 ounces of indicated. It's got the highest density of drilling. We had talked about the fact that we wanted to not only show the potential to expand and upgrade the existing Douay resource, but also show a viable strategy for what would potentially be a mine scenario, right? And so when we say that we're starting looking at, Douay West, where there's an existing head frame, where there was originally back in lower gold price environment, there was the intention, nobody puts a head frame in unless they actually expect to mine something there. So there's an exploration shaft that goes down to bedrock there. We've got the nucleus of something that's in the indicated, which could be reasonable. If you can start to sketch in a zone, if you've got 500,000 ounces of indicated, at Douay West, and then all of a sudden you've kind of sketched a, potential 500,000 ounce target at Nika, or somewhere else, then you start putting together a reasonable, scale to start thinking about what would an initial mine plan scenario start to look like, right? And we had said to the market, we're doing good exploration with this capital that we raised last year. We're doing two things that are designed to really create value and get us back to, not just the average of our peer group in terms of dollars per ounce, but something that's more of a premium to reflect what we think the potential of this deposit is with infrastructure. And that's showing that there's a pathway to growing the ounces from 3 million to 5 million. I think the Nika hole starts to get at that. And also showing something that, has the potential to become a mine, right? And so what we think about, just to answer that question about Nika and why at 500 meters depth, why is that important? If you look at, Detour Underground, if you look at Goldex, if you look at, Odyssey and Goldie, and you start looking at the kinds of drilling intercepts that got people excited about those zones turning into something meaningful, we're right on par. I mean, you've got a couple of 200 plus grams per ton per meter grade thickness type intercepts that are indicative not of, sure, if they were sitting at 100 meters depth or right at surface, a la Snowline, everybody would be crowing. But that's why Snowline is $1 billion company, even though they have no infrastructure there, right? I mean, it's a great company, run very well, and they've got a phenomenal deposit. Ours happens to sit under overburden in a more, established area. And so, when we look at the depths of, and you see right now, I mean, the Odyssey Goldie system goes down to 2,000 meters. And so, as I said, there's continuity in the Abitibi in the vertical sense. If we're showing a plunge direction, if we're showing areas that are open, it gives us a target that is not only meaningful between the two holes, but if you start to think about stepping out further from that, once you've done proper vectoring and you've defined a geometry, I think this zone could be very exciting. And it's just one zone within the Douay system, right? We have, the porphyry, we've got, we've got the 531 main zone. We've got all these other areas where we've planned some similar step out holes. So it's still just the early innings for us, but yeah, we are certainly excited about what we've seen at Nika thus far, and we're looking forward to returning some of the follow-ups, right? Which are really going to tell us, are we on to something, right?
Well, I do have a size question here, so we'll get to that for sure. But you also say in this news release that the Nika zone is similar to the main porphyry zone due to the host rock, but the grades vary widely between the two zones in that news release, as well as they vary within the porphyry zone itself. I mean, there's lower grade over large intercepts, and there's very high grade over narrower intercepts. And I understand you'll need to see more data in order to better understand the geometry of the mineralized chute. But how many more holes do you think you'll have to drill before you're confident in the continuity here?
Well, I think the holes that we have already completed, which I mentioned earlier, was a wedge hole, as well as re-entering a previously drilled hole that had stopped too short of what we see as the projection of the zone. We have another hole that's a slightly different 40-meter step out in another direction, and then we've got a hole that's planned in between, which is going to be roughly 150 meters spacing between 282x. If you got 300 meters between 282x and 338, you do one in the middle. I think that should be sufficient. If you look at our technical report on the resource that was done in 2022. Your audience can certainly read our technical report. I know you can. And so you can see sort of what the spacing was for inferred resources. When we drilled, just so you know, when we drilled, we looked at the block model and we looked at when we were planning this hole, we saw what 282X did to extend the blocks of mineralization beyond the existing pit when we updated, because that was drilled in 2021. So we saw what impact that had on the 2022. So if you start thinking about with a few more data points that really defines not only the plunge direction, but also, you need to kind of figure out, are you looking at something that's a, pencil going down? Are you looking at something that sort of mushrooms or looks like an eggplant? Or what's the rough sort of geometry of this thing just to define a target? And I think with the holes that we have planned, that we've completed and we have planned and underway, I think we'll have a very good sense of what it is. But again, the goal is not to turn it into a mine tomorrow, right? The goal is obviously when we came into this, the goal was to demonstrate areas that we felt had not only the space, right, to grow ounces, but also the geologic support. You mentioned that the similarities and differences between this hole and certain other areas of the porphyry deposit, right, the portion of the Douay deposit that we were calling the porphyry zone. Now, 55% of the existing ounces are in the porphyry zone, right? As you go to the southeast of the deposit, the thickness of the overburden increases. And so, you have to get a little bit creative. I mean, we mentioned as part of one of our development sort of trade-off studies as we go into updated resource by year end, scoping studies, PEAs, et cetera, is that we're looking at the potential to not only, do open pit, but also think about what falls into the realm of possibility for potential bulk tonnage underground. And so, you can come up with a host of things. If for example, you've got a 3 million ounce deposit today that's just over a gram, but you come up with something that's a little tighter in terms of the geologic model, the constraints, the geometry and how it sits relative to the overburden. If you come up with something that's, maybe 2 million ounces or 1.5 million ounces at, 2 or 2.5 grams or 3 grams, I would almost, to be honest, from a mining scenario, I would rather see things that have higher confidence and higher grade. I think the market has certainly been rewarding projects in this gold price environment that have, not only the grade, but they've got the potential to see these ounces actually realized. And certainly the companies that are producing gold and have cash flow are getting the rating and the multiples expansion where the juniors are, still struggling to garner some attention. So look, we don't manage the share price, right? We manage the company and we manage the results. To the extent that we can sort of control by doing good geoscience, by coming up with at least a thesis on what do we think our deposit could be, given all the external factors of what's the gold price, what's the cost to truck ore, what's the cost to rail ore, where's the existing mill capacity in the region, et cetera. From my standpoint, I look at an area like what we found at Nika. I look at an area that we have at Porphyry. I look at some of the areas that are even farther to the southeast, including 531. Where you have thick overburden, it's not necessarily. You look at some of the mines that are in the region. You look at the Selbay mine. You look at the Casa Berardi mine. They've mined successfully open pit with overburden, right? They can manage overburden. You can engineer your way around it. But we're at an early enough stage where we're not wedded to one or the other, right? We have an open mind. We let the data drive where we're going. I think that's what you have to have. You have to be intellectually curious enough when you have a system like this to let the project sort of tell you, where you need to go. And, at the end of the day, I think when we have success like what we just had with Nika, hopefully we're going to have continued success here. It does start to make you think a little bit about, could you start with a starter pit? Could you start with a starter, underground operation where you've got, existing infrastructure? Could you drill ramps and things? It's example as if you look at a plan view map of where the Nika zone sits relative to Douay West, it's the next deposit pod over, right? So, you can start to think about at 500 meters, what's the distance between Douay West and Nika, right? We calculated if you go straight down and straight over, it's about 1,200 meters. So these things become very interesting. Again, it's still early days, but we have a lot of work to do, not only to drill, but also to start thinking about, doing some of the work on, updating our resource and working with SLR and, thinking about trade-off studies. But it's exciting to have that kind of opportunity here at Douay. It's not a one size fits all. It's only an open pit project forever. Because we always knew it had that kind of potential to expand at depth. And it's nice that we've been able to test it and prove that out.
Well, you mentioned the 2.5 to 3 gram profile here. Is that what the cutoff grade for potential underground mining in this zone would be, or is it where do you see that?
I think it's a little bit early to be thinking about cutoff grades until we've actually done some of those trade-off studies. But I did, look at what type of underground results were being reported by, for example, our partner. When they got excited about things that were leading to the indication that they had an underground target of interest in the East Goldian Odyssey discoveries that they're now mining as part of the underground at Malartic. And these are comparable, right? And then they're at a depth that would be indicative of something it's relatively shallow, right? For, this may seem like it's 500 meters may seem very deep to most casual observers of the mining industry. But when you think about the Abitibi and you look at the depths of some of these operations, this is still a pretty good level for us to be at, given, again, some of the infrastructure advantages and certainly the partnerships that we have and the knowledge of, advanced project development and thinking about what's realistic. We're not rushing this, right? The reality is it's still got a lot of potential to grow and expand. But, I think in a forthcoming resource update, for example, what you saw in our 2022 resource is not what we're going to be repeating. Because in that 2022 resource, if you look at it, everything that fell, things that are categorized, ounces that are categorized as inferred underground in the 2022 were ounces and blocks that, didn't have different configuration or geometry. Same size blocks as what we had in the open pit. It's just blocks that fell outside of the pit boundary, right? So what you'd want to do if you're doing a resource update is you want to put some real domains on if you're coming up with an underground target, you're thinking about what it's going to cost to move that rock, how you're going to access it, right? What kind of, and you can start to put a better picture. It's more of what we call a geo mine met type of model, where you're not just thinking about the ounces as a whole to come up with a bigger number, you're thinking about what are those ounces are, as I've said, higher quality, easier, from a cash flow standpoint, the ones that you'd want to mine first, right? As opposed to the ones that are sort of incremental that you can add on the tail end that add less of an impact from a net present value standpoint. So there's a lot of thought. Trust me, there's a lot of thought going on. You talked about, be ready to call 911. You can only imagine the kinds of, things we have to think about and the permutations, the moving pieces that when we're just drilling a hole. Remember, it's a very narrow slice. I'm going to digress for just a second. When I was at Colorado School of Mines, we did an exercise where the professors in mineral economics and mineral exploration, the wife of one of my dear professors, Murray Hitzman, made a cake. She was a great baker. And she designed that cake like a geology puzzle. So it was layers of, chocolate and vanilla and different things. And then she put faults into it, and she put a zone, which was the sort of the ore body. And she used red food coloring and some icing. And so you could see this alteration halo. And what we had to bid on straws that were equivalent to our drill hole. And then all you had was those straws. You get a little slice of what was in the cake, and you pull it out and you start to do your stratigraphic, what are we? That's exactly what this is, right? For the lay people, is you have picture a big sheet pan that you're taking straw and trying to put the pieces together, and maybe you get a little bit of pink because you think maybe we're getting closer to the red, the real icing of this ore body, right? So I love that. Every time I go into exploration, and we think about a drill hole, we're looking at a very small piece of a bigger puzzle. And when we think about not only the geologic complexity, but the markets and their uncertainty and, cash positions and running companies, there's a lot going on here to make sure that we're driving success. It's really, as I said, it's really rewarding to be in this chair talking to you, talking to your audience, having, again, laid the groundwork and the foundation for success. We can't control it all, but, so far so good. Hopefully we get more straws to zero vector in on that red icing, right?
I like that story, although it is making me hungry, and we still have like 10 questions or something like that to go through here.
Yeah.
Do you know anything about the mineralogical context of the of this interval specifically at Nika? I mean, is it free, refractory, coarse, locked in silicates, or something else that you know already?
We haven't done metallurgy on this hole, but I mean, we see similarities to other zones that we've done early metallurgy studies that we had done. They were released back in 2017, 2018. We saw very good recoveries, no arsenic. Certainly the mineralization that we see at this hole, it's primarily associated with fine-grained pyrite. We see sulfide mineralization about 5 to 10%. It's very consistently mineralized. It's associated with phenetization, albitic alteration of what looks to be a cyanidic protolith, a host rock. And so, the rock looks very consistent. It doesn't jump out at you. I mean, we like to say it looked beautiful, and we certainly, before PDAC, we were able to see the core. We saw this type of mineralization. We saw this very dark, altered rock, and consistent, right? For 60 meters, we saw the bottom of the hole. And we had a sense that there was a chance that bottom, we were hopeful, crossing fingers, that bottom was going to run. And it actually turned out that, not just the bottom 60 meters of that hole, but, 160 meters of it actually ran, not just anomalous gold, but, reasonable, as we said, we reported the 169 meters of very mineralized rock. And so I think this is, as we said, it's very consistent with what we've seen previously in the Nika zone. It's certainly, we had the 282X hole and the 338 hole out on the table, and we're comparing between the two. And you see some minor variations in terms of, the brecciation or the foliation or things like that. But again, our geologists and the expologic guys have done a great job of logging those. As I said, we're doing oriented core, so we can also start to test not only our structural interpretations, but think about, lineations and what's the real explanation for why in this particular plunge direction from 282X, where there was, I mean, it'd be logical to it'd be crazy if you had this kind of intercept in 282X and you didn't have any drill holes around it, right? We certainly have drill holes around it. We just went in a direction where we thought the rocks were favorable. And then now that we have the result, I mean, we've got stereo nets, we've got other things that our team has done an amazing. I just looked at a presentation this morning that one of our lead geologists on site put together, and it's coming up with real technical explanations for why, right? Because if you just drill these holes, you take your straw, you come up, I hate to go back because I know it's lunchtime and I'm getting hungry now too, but just getting that straw and hitting your pink, in your drill core, it's the understanding of the why. I mean, I think Maple had done a really good job of, coming up with decent intercepts because the endowment of the system it looks to be something potentially world class.
Mm.
The harder thing for Maple in the past has been to explain why, right? Why is it there? What is, and if you can understand or start to vector in, we may not be able to answer, like the earth holds many mysteries, right? It's also the uncertainty is, you can't just create something that isn't there, right? So when we go and we come up with, because our resources are limited, as I said, we're a 35 million market cap company today. We have to be efficient with our capital. We have to put our money where it's going to generate the most value for shareholders. And so if you drill a hole like what we drilled at Nika and you can't explain why it's there, you should stop. Maybe go find another line of work, right? It's not that your thesis is always going to be right, but you should darn well have a thesis as to why it's there. And so again, your question originally was just on, the quality of the rock and metallurgy. I mean, we have some of that initial metallurgical work has already been released. We didn't do anything specifically metallurgically on some of these holes, but we see nothing in the rock, both in terms of consistency, quality. There is some interesting association with magnetic susceptibility. These are things that we're currently vetting because if you look at, for example, we're talking with one of our directors, our chief of our technical committee, Gerald Riverin. When we typically looked at as a geophysical tool targeting here, we were looking for mag lows, right? On surface, we were looking at mag lows as potential targets. And then you go down, you see that this big, wide, thick intercept, 2 to 3 grams is associated with spikes in magnetic susceptibility. I mean, it makes the wheels start turning, right? So it's a big puzzle. I think we're getting closer to seeing, putting those key pieces to help us see, what the Eiffel Tower looks like as we put our jigsaw puzzle together and know that it's an Eiffel Tower. If you don't know if it's an Eiffel Tower or not, maybe you think it's it's a pyramid or it's a Golden Gate Bridge, right? And so the picture is starting to become a little bit. I'm using a lot of analogies here, so bear with me, but I'm a visual guy, right? And at the end of the day, this is what geology and exploration geology is. It's whether it's a layer cake, whether it's a jigsaw puzzle. I don't want to be frivolous because clearly I've got a lot invested in this, as do a lot of investors and shareholders. But when you simplify it a little bit, that's kind of what it is. It's about trying to come up with the best possible picture of what you have and do it for the least amount of money.
Well, if we take all these pieces of the puzzle, essentially, like if we take everything at Douay together, including this new underground potential, and I understand it's forward looking and all that, but right now you've got 3 million ounces. It's about an 80-20 split between inferred and indicated. A little over half of you, as you mentioned, 55% of that is hosted in the porphyry zone. The rest is kind of spread around, and then there's this potential for deeper stuff now. So with all of that, if you put the puzzle together, how much bigger does the resource have to get for it to be economically mineable given the current situation? And again, all the pieces of this puzzle taken together.
It's a good question, right? And one that I think about, quite a bit. I think rule of thumb here is that if you've got existing mill capacity in the region, if you start thinking about the typical rule of thumb for most developers, explorers transitioning into developers was if you had 100,000 ounces of production over a 10-year mine life, right? You had 1 million economic ounces. That's a decent starting point. Whether or not it supports its own infrastructure, the amount of money, as we know, we've had a lot of inflation. We continue to have cost inflation in the industry. So, if you can leverage existing mill capacity where you don't actually have to, take away from the present value of the projects by expending a tremendous amount of upfront capital to build standalone mills and other things, that's probably going to be your highest return on investment, highest IRR type of project. If you see something that gets a lot bigger, I mean, the things that, behemoths, like our partner are, when they're producing the number of ounces that they're producing right now, I mean, I think there is a threshold, right? I think you're looking at some of those projects need to be 300,000 ounces a year type producers, right? You can see what Goldfields is looking at Windfall. They spent $2.6 billion to acquire a Cisco, a project that's just to the east of us. They're looking at a beachhead, as an expansion in Quebec, where they're trying to demonstrate the potential for 300, 350, 400, upwards of annual 100,000 ounces of annual production. And so for us, yeah, look, we've restructured this deal so that we have 100% control. When we think about what is a mineable, portion of that deposit, I certainly think that a starting point of Douay West, there was a previous PEA that was done on it by Dior back in the day. That's public. There's that infrastructure head frame, all that stuff that we've already talked about. If you start thinking about, even just to get to that rough, again, it's a arm wavy number. It's a back of the envelope, 100,000 ounces over 10-year mine life. But if you start coming up with 1 million economic ounces and you start thinking about what we have, at potentially at Nika, potentially in other areas here, could you come up with a reasonable mine plan? I think we have that potential, right? We have that potential today. For my money, though, I would rather kind of see us systematically look at not only the areas, as we said, one of the things we did with this drill program was testing areas where we had the opportunity to open areas. Like when we talk about open areas, you talked about the split of 80-20. I mean, I think it's roughly 75-25, but I won't split hairs there. I think the point is that in the inferred, you're looking at 200-meter spacing between drill holes. I mean, that's a significant amount of room, right? And you can start doing math on if you hit in certain of those areas, as we did with Nika, what's the volume, what's the tonnage, what's the average grade, et cetera, how many ounces can you actually build there? I think we see a lot of these areas where there are 100-meter to 200-meter gaps. And that's why I said in the beginning that we don't look at some of the things where we may collar a hole in the resource area, depending on the orientation of the hole, we may not be categorizing that as a pure infill hole. And, so I think to get to a number, a total ounces, I mean, if we started with 3 million ounces today and we ended up with, on the end of a resource update, 1 million of that indicated, and we start pushing forward, a development scenario on that, I think we'd be pleased. But I don't think we want to just keep it to, and you've seen a lot of companies that have come out with, for example, a PEA on 1 million ounces. And then what does the market expect of them? They expect, 100,000 meter, infill drill program, right? And the market then turns to the development side. You move into a different part of the Lassonde curve where a lot of that exploration sizzle is sort of taken out. And that's why, again, when we look at the original genesis of this relationship we have with Agnico, I think they were looking for, and I think certainly the market is looking for, those sort of game-changing, the sizzle of the market, up until this last mini run in the gold juniors that are starting to get more attention as they should. What were the Snowlines and the founders and the Oh My Golds and the ones that were really the spectacular new discoveries that are going to help to fill those new world-class deposits. And I won't tell you today that Douay is a world-class deposit, right? It has that potential to become one, in our view. And so you don't want to just start advancing. I mean, we said we're going to de-risk, but we're also going to show that there's exploration potential here. That strategy remains unchanged. But I think both of them, if executed properly, can really garner a proper re-rate and proper valuation for a company that's been underestimated in the past by the market. And as I've said, what I really came in here in August of 2023 to do was to turn around and change the narrative of Maple of having, over-promised and under-delivered. We've been a bit quieter. We've been going about methodically doing the right things to try to build value and rebuild value. So I'd like to kind of be where we are today, which I think we surprised some people with what we came out with. And I certainly won't speak to what we're going to come out with in the future, but there was a lot of thought that went into this program, and there's going to be a lot of thought going into how we advance it going forward.
Well, I'm glad you brought up the stuff, the work that Vior did in 2005, I believe, on Douay West, because I was thinking, is this Nika zone? Could that maybe change something or add something to the picture here? And it seems like you're again already thinking about that, and it seems like you believe it has the potential to. So it's something that I'm going to stay on the lookout for. But something that's outside of that 3 million MRE is Douay West, so double west or Quest, Douay Quest to be precise. So which is way off to the northwest, I believe. And as far as I could tell, it has no clear connection to your core mineralized trend the way we understand it now based on the data that we have. So if the goal here is to come up with a new resource soon and kind of de-risk the business, why why is this even a thing? Like why are we even thinking about Douay Quest? Why does it not get kind of a backseat at this stage?
Yeah, and listen, Douay Quest, as we call it, Douay West is a bit of a mouthful, and you see a lot of companies that come out with these, west of the southeast zone, things like that. I think Douay Quest was aptly named. I mean, it is a quest, right? It goes back to my earlier analogies. It's a quest to find and show that this deposit has the potential not only to grow in the immediate resource area, but also farther afield. As your audience may know, we've talked about it before. The Douay resource sits on a 6 kilometer strike length of the Casa Berardi, which we control 55. And so when you start thinking about the regional setting, sprinkled into our 10,000 meter program, where a few of these higher conviction, again, there's nothing is a guarantee of success, right, Antonio? You know this business, so when we look at a green lighting a target similar to Douay Quest, and in Douay Quest case, it was based off of geophysics, was based off of this goes back to how the original Douay deposit and a lot of deposits in the Abitibi were discovered. Inco would look at these regional scale V10 maps, look at favorable geophysical anomalies, and because you've got a significant amount of glaciated terrain and overburden, they go drill test them, right? And so in our case, part of the advantage of having raised the right amount of money, to not just go and drill, low hanging fruit, layup, slam dunk type targets, but actually have a little bit of room to start. If we're going to tell people that we think the deposit has potential to grow, by gum, we've got to go out and see. We have to show them that, right? We have to actually go and take some of those shots, and no good mining company isn't without its sort of managed risk taking, right? And so Douay Quest was one of those, but it was a calculated risk to go out and do a hole that what would success look like in a hole like that? It looks very different, for example, from the type of success that we would hope for out of a drill hole in the Nika zone or Porphyry or elsewhere. A hole like Douay Quest, you see favorable structure there. You see favorable textures in the rock. You see, sulfide mineralization. You see all the things that we typically associate with favorable areas for gold mineralization in our existing understanding of the Douay system. That's success, right? It gives you something, and if it runs, anomalous gold, that's a bonus, right? And if it runs something even bigger than that, then oh my gosh, right? And at that point, certainly any CEO sitting in the chair would take credit for it. But the reality is between you and I, with Douay Quest, we would have gotten kind of lucky, right? If we got it and we hit it, I could talk, and I certainly will. If we hit there, I will give all the credit in the world to the team for having the conviction to come out and say, like, this is a target that we want to test. Because again, I'm not sitting here deciding on drill holes, right? I have a team that's very astute. We have a strong, technical committee. We've got, some very good partners. We've got a lot of forces with a lot of brain power dedicating to how we're actually thinking about the sequences of the targets that we chose. But I think it is telling for your audience and for people that are looking at how we did this. When I've spent a lot about what did we decide to drill first, and getting some early results into the market, all these other things. Again, we're not just looking for layups, right? If we just came out and we just said, okay, we're just going to go drill in known resource areas and try to return gold in a rising gold market, people would question the meaningful, how meaningful are those results, right? On the other hand, if we take some calculated risks and we do some bigger step outs here, as I've said to our team, I mean, we showed with the Nika step out that we can materially add value in a zone that, when you looked at the resource broken down by zone, Nika is less than 100,000 ounces of our total resource endowment. Now we've got something that could potentially be a much bigger target, right? So with one hole, we've kind of changed the game plan, right, at that zone. If we have a discovery on something like the Douay Quest or in the Northeast IP zone or some of these other areas that we've mapped, but we haven't had, and there's a map on our presentation and our website, which shows these stars and different colors of stars. And I think previously the companies put those out and, people are looking at that and going, oh, we don't care about the greens and yellows. We want the reds and we want those things just to show us that you actually can drill and find more gold. Well, the more success we have in those red areas, right, the more it gives us the ability to go and test some of these other things, which again, they're stars. They're not just things we just randomly picked and just scatter a map with a bunch of stars and say these are drill targets. These are all backed up by work that's ongoing with compilations and understanding of all the, geophysical, geochemical, structural, tectonic, lithologic, all that good geology that we're back to doing here at Maple and Maple 2.0. So Douay Quest was one of those, right? We don't know what's gonna, obviously, stay tuned, watch the space, as they say, for the results of that. But we do have, and we will have a couple of those holes sprinkled into the program, where we think there's potential to, as they say, add some torque to our current drilling.
So you want to do a quest on Douay Quest? I'll show myself out in just a couple of minutes.
Oh, listen, you're like me. I've got this line which is just Douay it, right? And the guys at Nike might get mad at me for using that, but we're trying to do a quest. I may have to make a new T-shirt. Maybe you can design the next T-shirt, Antonio.
Well, I am claiming if there's any royalty on those T-shirts, I'm claiming it. I've got it on tape right now, but. Kieran, I know that you almost have to go here, but the fact that you're dealing with many different zones that we've talked about today, they're kind of scattered around the land package. I think it's 10 zones that I counted. There's probably more, but wouldn't that be a problem in a mining scenario to have like kind of one coherent mining operation? How would you deal with that? I know it's kind of a big question, and maybe it's early to think about it, but it's also something that I know you're already thinking about.
Absolutely. I mean, I think that's been the biggest also knock on Maple is you got all these, it doesn't hold together as a single pit. So what is it? Is it a 6x2, open pit? If it was, that'd be one of the largest open pit mines in Canada, rival anything you see at Malartic. And so, I think sketching in some of these areas between the currently defined pits, looking at bulk underground, if you can find something that has a nucleus of a starter operation and you have all these other zones that remain yet to be really defined. And, while you're seeing anomalous gold and you see a massive footprint and you see all these things, I mean, what Douay could ultimately be is just, you have a lot of operations, a lot of successful mining companies have started with a lot less, right? They've started with maybe 500,000 ounces and then, it becomes the gift that keeps on giving because, you have the infrastructure there. You've seen companies that have had both success and failure, right? Sometimes companies, they say, if you build it, they will come, right? It's field of dreams, right? Terrible, to bring that into conversation. But you build the infrastructure, you're motivated because the infrastructure, in theory, if you pay for it early with some of your early mining, then you find more ore around it, then you've already got the infrastructure there. And that's really where, your gravy is, right? In your cash flow model. For us, I look at this and say, I think the fact that we've got such a big footprint, different pits, different zones, each of them with high grade and high grade tenor. If you look at them for the specific, like that we have a map that shows the plan view that shows these red and green intercepts, and the red ones are the ones that are, as I said, that's the icing, right? That's the stuff that's there that's greater than 10 grams. So I think Douay could be the gift that keeps on giving. I think you just can't keep arm waving about, there's lots of gold, lots of gold, lots of gold. I think you probably do want to try to focus on areas that could be your sort of early mining scenario, whether that's on a open pit basis, on an underground basis with, potential drifts or ramps into zones. I mean, we saw, for example, Osisko, at Windfall, they had an underground zone, and again, they drilled 2 million meters to find it. All the credit in the world to Drill Baby Drill and the team over there, and Sean and John, who did an amazing job. But they also, they defined an underground, they defined a bulk underground, they did a bulk sample, they did exploration work, put an exploration ramp in, and so the art of the possible, anybody looking at maple should really look at, this is not, the middle of nowhere in the Yukon, right? This is not the northern Arctic, right? There are lots of analogs, for in the Abitibi, in Quebec, for projects that have started with what we have today, and grown into very successful mining operations, right? And Malartic would be a very good one to look at. So not just because we have a partnership with Agnico, but because when you think about it, I mean, they have a big open pit. They're transitioning to underground. They've got a lot of mill capacity they're trying to fill. So I think we're getting there, and I think the fact that there is additional ounces to be found, there's additional zones of interest for us to go and test. I think if you're a major and you're looking for, another leg of growth, now that the market is focusing on that growth aspect of where the next mega deposit is going to be coming from, I think you want to see that there's something that shows the potential for good return on investment from an operations standpoint, but that has the room to grow. And I think Douay, we haven't demonstrated the former yet, but the room to grow side is certainly there. So that's again, it goes back to our two-pronged strategy. But lots of early days, but I'm very encouraged by where we are today, and lots of news flow to come.
All right, Kieran, well, I've already taken more than the hour that you had initially promised me, so thank you for being so generous with your time. But what am I forgetting to ask you here? What did you come here hoping to talk about that I failed to bring up?
Well, outside of layer cake geology, jigsaw puzzles, licensing agreements on T-shirts and other things, I mean, we've opened up a whole new area that we can delve into maybe in our next conversation, which I really look forward to. But no, I thank you very much for your time, and it's always a pleasure. So I look forward to the next one already.
Thank you so much for doing this. And for people listening, I'm sure I'm forgetting some stuff to ask. You can always put them in the comments in the YouTube video, or send me a DM on Twitter, or go to resourcetalks.com. At the bottom of the page, there's a form that you can just send me a message if you want to send me a private message that way. But again, Kieran, thank you so much for your time today.
Thank you as well. Look forward to next time.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is, and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."